The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. Hope you guys are having a better than chilly morning as it is in North Carolina. I heard it's actually cold in Clearwater, where the TFNN home office is. So there's actually frost here for the first time I've seen. I think they had it in October when I was in Asia, but first I've seen since I've been back. Well, what do we got going on here? The S&Ps, those are obviously, I don't know if this is indicative, the Russian plane getting shot down or whatever, but we're definitely coming off this 2089 area that we couldn't get through. When I saw this thing compressing up against this area on our daily and using that inflection point to kind of crowd, that was the situation for me to not be short and wait for the breakout. So I am actually not in this pullback right now, and I don't know if the confidence level that I have is super high that we're going to continue down, but we have seemingly now come off 2089 and this 2082 area on the 240s is a little bit of a breakdown situation that we almost retested this morning. We went down into 65 and almost went back up into that 82 area, but didn't quite get there. So, dims the brakes sometimes. We have a situation. We have a situation where our scanner now is doing pre-market calculations as the stocks open. When I say that, I mean the breadth calculations are becoming more and more apparent pre-market, and you've also got trading opportunities as these stocks populate pre-market on all the time frames, and you can catch those in some custom sorts that you might want to do, or some custom sorts that we've already got in there. And by the way, just to let you know, we've put in also recently currency futures. Obviously, there's working out a couple of kinks on the pricing. There's a lot of things going on in programming. You have to figure out how many decimal points over and how to quantify things and how to categorize them properly. That black cell will disappear by the end of the day, trust me. And we're going to have our rounding situations on currency futures under control by the end of the day. The programmers are working on that right now. So we put what is this, the 6 futures, I believe, that are these aren't in the, I don't think these are the ones comprising the US dollar, but these are some of the 6 major currency futures, or futures version of the Forex pairs. So I want to go back to something after we just kind of barely touched on the S&Ps. I want to go into a trade that I've been watching for the past couple of weeks. And this is acting exactly how I like to see something act, actually, for a possible decent turnaround here. Now, we've been talking about nibbling on the Australian dollar on the long side when we get back above this 71.69, 71.70 area. We talked about not pushing the short gas pedal anymore here because of this long-term divergence in Navigator, higher highs and Navigator, lower lows in price action. And right now, we have closed above, back in the balanced area, which is the first sign of, good news here for a setup like this. And we've come back already this week and retested. We've reached a low of 71.59. Remember, 71.69 set up for a low, so we've kind of touched it and come back off of it. And what I want to show you is something really, really positive here on this particular scene with the Aussie dollars. We've kind of, again, closed above profiles on our daily, gone back and retested that DMZ with the daily and weekly, and now we're starting to kind of look decent here. Now, when I go into the scanner, I go into my Forex section. and I go into this little scene right here, you can see all this happening. You can see the prevailing, arrow in the gray cell here on the long-term weekly, like we just talked about. But, you've got some green shoots starting to happen here, and you're just starting to possibly, even though we've got a top there, you're just starting to possibly look like we might be able to start clearing some 240 situations again. And then you can start looking at, the top of the profile on our daily, bottom of the profile on our weekly, at DMZ, putting the stops below, letting this thing just hopefully unwind up into that 74 and some change area up top. But the bottom line is what I'm trying to say here is I like the way this thing's set up. I like the confirmations that we're getting now. Does everything always work out to what I say? No, but this one, you've got some decent probabilities, in my opinion, on your side here. And the good news is you got some really good risk reward scenarios in place. So, if you lose, you lose. You lose one, you try to make four. And this particular scenario is good ratio there. If anybody's got any questions about that trade, I just would love to hear them. And you guys are always welcome to call in or type in questions in the den. That's just one that I've been following, but now it's starting to kind of starting to look a little ripe there. It's been looking ripe. Let's take a look at the euro, because this is one that is on the eternal short list. You're trying to find any reason in the world to short this, any resistance areas. Here's the weekly. We crossed the 109 border. We're not really looking back here. We're going to have some noise, and we started breaking down below 107 again yesterday or day before yesterday. But what do you do with it now? We've already kind of retested that 107.10 area. So what I'm going to just talk about now is you've got some leverage here. This is the 240s. We've had some noise we've had to pay attention to on this trade on the 240s on the way down. But right now, again, if I go back in the scanner, EUR USD, there you go. Red weekly, red daily, gives you the inflection points we just spoke of. There's that 14, an arrow down, and that inflection point up top is 106.76, 106.77 rounded off. So that really is what I'm looking for. There it is right there, graphically represented here. And that's, again, stops above on the short term. The long term, you want to talk about risk reward scenarios and giving yourself some landing areas. Let's go back to the daily. Stops above this 108.16, 17, and targets, hate to say it, par. That's what I'm looking for here. Canadian dollar, U.S. dollar. U.S. dollar, let's look at first. Let's just stay on the currencies for a little bit here. Yesterday, kind of had some new highs, backed off, but still staying above or within the top range here of our profile. So highs yesterday, 100.06, 100.07, rounded off. Let's go into the scanner. Let's go to the, we've got the dollar in the futures section because it's not a, let's see here, where are we at? There it is. It's a future, but we're going to kind of recategorize these currency futures a little bit easier so you can find stuff, just little tweaks here and there. There's that top arrow up. Let's just kind of see where this is at real. Okay. And by the way, we're splitting off our futures and currencies. They're on the same server right now, but we're splitting them off even farther and putting them on two different servers. So this will even be more, 60-second update quality, even when the market gets fast here. But here's that 45 arrow up. That means that we've had 45 consecutive bars in a defined uptrend by way of profiles on the dollar. Let me just kind of show you that. Okay. There's that graphically represented. Here's the daily. Again, I want to just kind of sum this up now. Short-term guys, you got 99.67 here, and you got 99.52 down below. Those are the daily infra highs, the 240 infra lows. We've hit that 240 infra low and bounced off of it this morning, with the eventual goal above 128. All right. Keep your stops in force. This thing's kind of compressing up there, not wanting to get away from this weekly unfair high here. I'm expecting this to shoot above. And this is, if you look at this, it's kind of similar to that S&P chart before the S&P sold off on those daily unfair highs. And that's why you've got to keep your stops in. And here's that POC also for support at 99.56. So 99.50, 99.60, 99.70. Got some support areas here, and the goal up top again is past 128.29. For guys who are trading this on a long-term basis, I know there was a little bit of a shakeout last week. You've got your stops able to be ratcheted now up to below 98.79. So that's kind of the daily unfair lows. And again, if you guys have any questions on that, feel free to send them in. All right, the yen trade, just to say on currencies this morning, not a big fan of going short. You guys know this. A little bit of a pullback here, still in that balanced area at bottom, slightly below. Let's pull up that yen in the Forex section of the scanner. And there we go. So kind of a critical area. We're showing bottom on the weekly, bottom on the daily. That's just exactly what we saw on the charts. I want to explain this a little bit. We've pulled back into these areas from above. And the reason it says top in red is, yes, price is definitely in a smidget way below those inflection points, daily and weekly. Let's just point those out, 122.55 on the weekly and 122.60 on the daily. These are noise areas. The tops and bottoms on the scanner are that 10% variance of the height of the box. So this is what I would consider still noise. This is why you put your stops, based on your appetite for risk relative to the boxes. And I don't put them within 10% because that's what I consider a noise area. But right now, looking at this still is trying to gather up some longs down here, take a shot. Again, up top on this initially is 123.60, 61. Those are pretty good risk reward scenarios. Here's a short-term 60-minute right here on the yen. And, if you're trading the yen, these short-term sells here are really good red-green day trading opportunities on the yen itself on the 60 minutes. So just making you guys aware of that. Tell you what, we're going to go to break in just a second here. And when we come back, we're going to hit a couple more commodities, and we're going to get through some stocks and some stocks in the news on StockTwits, actually. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I just want to point out the S&Ps here. I wasn't a big fan of going short against that inflection point as I talked about, but this is a really good example of actually staying out of trouble on the long side. We never got that daily close above. We always talk about confirmations. This would kind of clear some folks out. So avoiding some longs here, not a bad thing. Lost 0 money. I personally didn't take advantage of the short there, so that's terrible. But I want to see how this breadth unfolds on this pullback today. You always want to see, are these real moves? Are these things to really kind of sink your teeth into? And that's just going to have to wait and see on let some internals open up and let's see how the profile net positivity or negativity pans out. So Russ has got a question here. Let me look at this. John, the euro has 1.07 in round numbers as resistance for 3 time frames. In your experience, does that make that resistance more significant from a probability standpoint? That's a good question. Let's go over here to the euro and let's go to 1.07. Well, I don't exactly know where you're getting the 1.07, but let's look at this. Okay, so we're back to the euro really quick. Well, if I can get my charts to look right here. What the heck happened? Okay, so 1.710 rounded off. Our weekly, we talked about that breakdown below 109 there, but We've got 106.76. These are all numbers in the scanner. I'm just giving these out as we look at them on the charts. There's the numbers I'm talking about. 107.10. There's that 106.76. So I guess we're talking about looking at kind of an amalgamation around 107, Russ. Is that fair to say? Yeah, I mean, we talked about some stops above 108 on the daily, 108, 16, 17. Okay, yeah. So let's just go to the daily for a second. So, my God, how did I do this? Get this chart back in so we can see it. That will be the first line of stops. I'm kind of a stingy guy when it comes to not letting things get away from me. I take a lot of stops, actually. So that will be the first line of defense. We've kind of already closed below there and retested it to some degree. Really, you got to be kind of completely ready to sit on the sidelines above 109. All right, that's the long-term stops. I mean, that's a lot of pips. 250 pips in your face if you want to take that kind of heat and still, let this thing have some area to play around in before it hopefully dives again. But there's a lot of people on this trade. That's the one thing you got to keep in mind is I don't know a lot of people that are real bullish on the euro right now. That means that we could have these spikes and just kind of run people out, stop people, hit some stops, and then ultimately continue on the downside. Fundamentally, I think that's probably, there's a lot of things fundamentally lining up in that camp to be short. But so stops on a stingy level above 107.10. If we're lining up on 3 time frames for us, and I don't exactly know where you're getting those numbers. I mean, we have some general congestion around 107, and we're looking at these, 240 unfair highs at 106.77. But first line of defense stops above 107.10, and then I'd probably be willing to stop out again above 108.16, 17, give myself a little bit of a noise factor there, and then be able to try it again at 109. So I'm willing to get stopped out twice on this trade to sum it up, and then kind of back the truck up around 109, and again put stops above there. But you've got some short-term resistance around 106.77 into that 107.10. So accumulating some shorts into that area, if you're not in the trade right now, not a bad idea. Stops above, and then you got some targets initially at 106.10, which is about 100 pips lower than 107.10, and then even lower, in my opinion. Wow, we're on another break here. We'll be right back, folks. And I got some stocks to look at from Stock Twits that we'll see how to trade some of these crazy animals that people are talking about on social media. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I want to look at the 10-year and the 30-year really quick. This is, again, talked about, some targets up top, 127.11 and 127.19. We've reached a high, 127.06. I think we could go a little bit higher with this, actually. And why are we kind of looking at this from the long side? And the market's really helped us bump up a little bit this morning. We talked about leveraging with a little bit of noise factor, 126.17. Still think we can go higher on the 10-year trade here. That's the reasons. And the 30-year, kind of similar situation, really. Kind of got back above that, into that balanced area, 152.21, came back and retested. Those are the powerful trades when we close above and retest. And at the same time, we were clearing our daily profiles, 153.10, to get even more confirmation that we could head north for a little while. 156.06 are the targets on this trade on the 30-year. So that's the way I'm looking at it. Short-term guys on the 30-year, I love the way this is acting. There's your numbers. It's in the scanner. Voila. There you go. Okay. This is not a change in massive trend here in the 30-year or the 10-year, just some trading opportunities. Okay. Just want to throw something up. If you guys are going to London, we're actually we're one of the sponsors of this EMFX Trading Summit in London on the 3rd. And NextChange is actually the main sponsor, which we do a lot of programming for. But I was looking down at this, and I was just making sure my name was in here. I'm going to be one of the panel guys that are yapping on stage every once in a while. But I saw Tom O'Brien's name here, and I was like, Tom didn't even tell me here. But I don't know if this is the same with Tom O'Brien, who's head of the Moscow exchange that is Big Daddy on TFNN. So that was interesting to see that. So anyway, Russ, I think we got that straight. And RJP, I hope we answered that question. And what we want to do here now is look at a stock called VRX, and this is right out of Stock Twits. I kind of like how this is acting, guys. We had a new profile in our weekly. It's an $80 stock. That's pretty supportive. And that 8305 bottom of our profile right there, again, new profile attempting to appear, had it happen this week, 8305. And then we've got also a breakage of profiles for the first time really in God knows when. When is that? August? And that was at the 260 level. All right. So you've got 8305, and then you've got this top here at 8469. So you got some support on this stock. I like the change in tone that's going on in VRX. Pre-market, we're trading, looks like, what is that, 90? No. Wait. 1124. Oh, I'm sorry. Our dailies on E-Signal and chart haven't printed yet, but let's go to this. So 8305 and 8469, you got support on this stock. I liked it the way it's new profile on the weekly, broke some levels on the daily for the first time. And more importantly, on this particular scene, and this is a social media kind of chatter thing going on here, we closed above and are retesting that level. You know I love these types of setups. So a little bit of an opportunity here. Where do you put the stops? It's not for the faint of heart. Below 8305, in my opinion, based on your appetite for risk. That's, again, got to give yourself a little noise level, especially on a volatile stock like this. And if you guys have some things you're thinking about getting into, long or short, just please throw them out there. Call in. I love to do these kind of instant analysis on some of these stocks that maybe some other folks will get some benefit of also throwing them out there. So another stock we want to look at, this was in the technology section. Let's see, PANW, Palo Alto Networks. You know, there's kind of some long chatter going on here, but you've got 175.32 sitting up there. We're trading 177 right now. Even though we've kind of started clearing this, we've got to completely get a close above 175.32 and for me to get really excited about this. Pre-market, we're trading 177. So it's not the time to pile into this from a breakout standpoint yet. Would like to see at least a daily close above 175, and then I think you can use that as support. But right now, don't get carried away with this pre-market stuff based on chatter. I mean, this is, we've had a good run up, 25 points in the stock in the last, what is this? 1, 2, 3. What is this? November 12th. So, a week or two, week and a half. Don't get carried away with the pre-market jump up in the air like that. Let's just now we got to wait and see what happens here on the close today. I hate to see people getting involved with these things pre-market sometimes on fundamental chatter news like that. We got to look at Facebook. That's I don't even know why anybody talks about this. It's it is what it is. 99.24, we almost got back there and retested that after the breakout. These are our weekly profiles. Somebody's always asking, where's this thing headed? Well, I know every time we find any type of support situations on the stock, I'm looking at Facebook. That 100 area, that was big, profile bottom low. Now, in my opinion, anytime we get even near 104, you got to be willing to step in and start buying this again. I don't have any targets on this. We're going to have to just let the profiles regulate it up. Let's take a look at gold really quick. A little bit of a spike this morning, but just kind of coming back to reality. Long-term stops above 187 or 1087, 1090 still in this particular commodity. We got to take a look at crude oil really quick. This is the January contract. And this is one where we talked about we had to get above 43. We kind of retested it, coming back up. We can't really get excited about crude oil until we have a close above 43.43 on the long side. Obviously, we bounced from 40 and some change up right now, but you got some serious headwinds between 43.43 and 44. And in fact, that may be the shorting opportunity for crude oil to make a couple of points again as it may relax back down. Got to keep your eye on the dollar on this one, though. Dollar goes higher, crude oil's got to reprice itself. And I think that the dollar is going to make another run up past 100 here. So it poked its head a little bit above 100 on the dollar, as you can see yesterday, in fact. But it's kind of coming back and not really wanting to get away from that 100 area. And again, we talked about earlier, 128.29 is going to be the targets. And in my opinion, we'll probably blow through there ultimately on the dollar. Okay. We're going to take a look at the XLY really quick, but I think we've got a caller first. Alan from, is that Czech Republic? Alan, are you there?
Yeah, it's California.
Okay,
I had
how are you?
cancer, so I talk with a little list for a couple weeks.
Okay. How are you?
All right. Chesapeake Oil or Energy?
Okay. Yeah, let me type that up. Typing it up right now. Okay, so,
I was looking at options in a year.
Okay. So what's the play on your mind here? What's the option strategy you're thinking about?
I'm new to options, so the strategy is just a strike call or a strike at about $6, and I feel like 50 cents for the stock.
Well, obviously there's not a lot of risk in that. I mean, it's based on how many contracts you're buying. I mean, this is a stock that's just gotten the crap beat out of it without question. Yeah, I mean, the deal is here, you've got 658 and 668 is these unfair lows on the weekly and the daily. They haven't really gone back and retested that. So if you're going to play this from the long side on these $6 calls, that's your target. And how far out are we talking buying these things?
January, I believe it's the 10th call.
Okay. Yeah,
16.
You know what? I mean,
or not 16, excuse me, 17.
Okay. Yeah. I mean, I don't think that's a bad play. I mean, I'd be looking for a retest at least up into 658 on this thing. Again, the dollars could drive crude oil prices a little bit lower. But, let's take a look at the XLE really quick. Do you mind?
No.
Okay. I don't think that's a bad play. I mean, you don't have a lot of confirmation to step in yet, but it's a $5 stock, and it's just recently had the volatility. We'll go back to it in a second. Here's the XLE in the long term. I like the way this is acting actually, and the XLE could pop up into 75, which absolutely would help Chesapeake Energy. Here's the daily. Yeah, I like the relative strength of the XLE versus crude oil right now. And let's go back to CHK really quick. Yeah, I mean, I'm not saying it's due a pop, but you got some things in your favor here. And you got some magenta bars here on the daily, which you don't see lining up two in a row very often. That's usually an exhaustion type move. Yeah, I like this actually. Does that make you feel?
I'll do it.
All right. Well, I'm not telling you to. I'm just saying.
No, I'm just saying.
Yeah.
That was where I was planning.
Not a bad situation. It's actually kind of cool that you picked this out, actually. Well, anything else, Alan?
No. Well, we bought some SN, which is kind of an offshoot of Chesapeake.
SN?
Oil stock for my daughter for long term, but
okay.
I have a sell-in. I bought it at 528, and I have a sell-in for 428.
What's your selling at?
428, because it blew right down when I bought it.
Okay. Yeah, these things are beat up, huh?
Yeah.
Wow. Yeah, you can get some doubles real quick out of things like this if there's a scare. I mean, these things are beat up so bad, and crude oil, could do a little squeeze at any point, which would cause these things to kind of get some legs. I don't think these are scary trades by any means, and I like the way you're trading them with options. I mean, I love that Chesapeake option play because, if it doesn't work out, dims the brakes. I mean, it's not no harm, no foul,
Yeah. That's how I look.
Cool.
Okay.
Well, Alan, it's been great talking to you. Thanks for calling in.
All right. Thanks, boss.
Yep.
Bye.
Bye. All right, so let's take a look at the XLY. Good call. Really good call. This is kind of fighting everything known to man here, but did a Bloomberg brief on this one. Had a good divergence happening here on a long term. This is not a trade for the faint of heart, but you've got a lid here between 80.5 and 81.5. We're coming up into that top right now. You've got some market help right now with the S&P starting to pull back this morning, and the print this morning, the way I see it, is 81 already on the XLY. Some people could start running for the door on this, and you've got 79.43 sitting down below, and then if we break that on a daily close, we actually could start getting some legs on the downside. Again, there are weaker instruments out there relative to the market, but this one may be something to make some points off of quick and in a quick sell-off. Let me check. Okay. Just checking, somebody sending me a note here about something going on. I don't think we need to talk about that, but let's take a look at another stock on StockTwits. Now, obviously big, kind of social media chatter. It's all over the place this morning. It's a relatively cheap stock. Now, we're trading about 11.13 right now. So with these types of stocks, and here's the AEZS, obviously breaking hard above the trend that's just been getting, oh my God. Yeah. All right. So how do you trade something like this? Looking at the profiles, and this is not reflecting pre-market pricing at $11 already. We're going to hit this really quick when we come back and then move on to some finality before the end of the show.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We were looking at, was it AEZS? Let me pull that back up. And, again, this is the pre-market, just everybody in the world's talking about it seemingly, and then that kind of draws even more attention even from yesterday. But how do you trade something like this? Trading 1181. This is our 60-minute on this. There's the 1003 is that weekly unfair high. All right, so we came up above yesterday, came back and retested that. Okay, and then here's our weekly. So pre-market, we're trading above. Post-market yesterday and pre-market today, we're trading above this 1030, excuse me. So if you go back in time and look at something like this, my God, this was a, ouch. Somebody's taking a bath on this. This is a damn good example of not doubling down on something that's going down. Whew. So now you got some breakage of profiles on the long term. And 1030 is where you can kind of set your mark and set your stops. And that's kind of where the breakout on the long term would be valid on a stock like this. I'm not a big fan of, you can get chopped up trying to figure out what's going to happen on these noisy stocks like this that are driven by social media. So that's the big number, 1030. That's where the battles, in my opinion, should be picked on something like this. Just to rehash what's going on pre-market here before we end the show, got about 2.5 minutes left. Dollar, some support around first initial line of supports around that unfair high 99.60 99.67 with a little noise. Got to call it quits big time. Sit on the sidelines for a little bit below 98.79. That's the play on the dollar. The S&P situation. This is where we're at. We have come off this 2088, 2089 area. Still don't. We have to kind of wait and see. Look at some stocks opening to kind of check some breadth situations on to get some confirmations on this. The 60-minute obviously is starting to roll over again, but if you look at the 60-minute crossovers, these are really, really good signals in general. Had a little bit of noise yesterday afternoon, which was, a little weird being at the top of a profile and having that kind of starting to roll over. It didn't bode well for longs, but again, I mean, the classical technical analysis pattern of not wanting to get away from that inflection point at 28.9 kind of scared me away from shorting it. But starting to get some cooperation here finally on the breadth. All right, so I'm going to hold you to this, Tucker. You got to call in tomorrow. Let's hit gold really quick. I know there's a lot of gold traders that watch this show. Give a heads up here. We basically rallied up into, what is that, 1081 this morning. But again, I think the writing's still on the wall for this. You just got to stay the course. Stops above 1087, 1090 on this. I think we still could fall apart even further on gold. Silver, I haven't mentioned. Here's the December contract. 1423.24 is your, and I think we hit that to the tick this morning. That's the daily unfair lows, and we've come off it again. That's not a good sign for people who want to be catching bids on this particular instrument. So there's your picture. It's all in the scanner. There it is, feature section. Silver and gold. We are somewhere in here. There it is. There's silver. Red. Guys, stay tuned. Larry's next. All the hosts on TFNN all day long. Stay away from CNBC and especially Kramer. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.